Crypto services provider Matrixport predicts that there could be a compelling investment opportunity in the Bitcoin mining space. Joining us now to discuss is Matrixport Head of Research and Strategy, Markus Thielen. Markus, welcome back.
Well, thanks for having me, and happy Friday.
Happy Friday to you. Before we get into your discussion of miners, we just brought up this 27,000 mark that we just got to in Bitcoin. And as I noted, that the markets in crypto in general have been quite thin. What do you make of this latest rally, its causes, and just in general? Because I know a rally in Bitcoin plays into your thesis with the miners. So let's talk about this sort of very short-term move. Obviously, it's not the long-term move that you're talking about. But let's first talk about the short-term. What do you make of it?
Well, short-term, I think you can draw a trend line from the July high this year all the way down to the current level. And I think you noticed that we are actually breaking out here. So we are breaking out of this triangle formation. We're entering October, and historically, Bitcoin performs really well in October. So over the last 10 years, 8 of those times in October, the market was actually up with an average of 22%. So I think the odds are actually in our favor. And I think we can probably, play in with some macro ideas and so on. But I think it looks quite positive right now.
Aside from the, I always call that astrology in a way, because it's just looking at the calendar and saying, okay, well, this is what happens. The moon cycles and farming cycles dating back 7,000 to 8,000 years to the birth of agriculture, and it affects commodity prices. But I'm wondering, in this case with Bitcoin, this was a short-term move up, and in many ways, there's a lot going on the macro stage in terms of oil, in terms of equity, in terms of interest rates, in terms of a perceived hawkishness in the Fed. And now we just got the inflation data. It doesn't, even though it's it's being spun. The recent inflation data that just came out today, the PCE, it's being spun almost as, well, it's the inflation is getting a little bit more under control. It's still above 3-something%. It's still close to 4%. We're not anywhere near that 2% target. Why then would all of a sudden we see this little bit of enthusiasm to push Bitcoin out of that resistance level?
Well, yes, inflation is 3.5% right now, or around 3.3%. But interest rates are actually up 5.25%. So interest rates are up almost like 200 basis points above inflation. And I think inflation is just really like an indicator that kind of gradually trends lower. We have seen the highs last year, and we are materially lower. But of course, the Fed is still kind of like over hawkish. I would claim here, and I don't think they need to be so hawkish. I think at the first moment when they turn a little bit more dovish, I think Bitcoin is just really going to break out quite aggressively.
So I want to turn to your report, because you see incredible rallies happening in Bitcoin miners in the event that Bitcoin goes up to all-time highs. And I kind of want to get to the idea, first of all, what do you think would be the catalyst to bring Bitcoin back to those all-time highs, given, as you said, the Fed seems to be quite hawkish? But second of all, how are you coming up with the valuation numbers on these miner stocks, these Bitcoin miners? How are you coming up with the valuations? Is it based on cash flow? Is it based on revenue multiples? What are you using to determine that rally that you see?
Yeah, we have of course looked at equipment efficiency, and I think, for example, Marathon Digital stands out here. Last year, I think Q2 and Q3, they had an efficiency really from just 30-40%, because they moved part of the operation, from Montana, down to Texas. And of course, this is major negative implication for the share price. But of course, the last couple of quarters, they're actually running 75-80% efficiency. And I think we are already seeing this in the numbers that are producing a lot of Bitcoins. And I think when you just show historically over the last 2 years, what did a Bitcoin price reflect of 60,000? Where was the share price? The share price was up actually almost like 10 times higher. And we really simply run the numbers and came up with a regression analysis. And we looked, of course, at those miners that are highly correlated with where the regression coefficient is very high, right? Of course.
So this is based on when you're running that is that stock price to the price of Bitcoin, or is it based on the top line or bottom line?
So we look at against the price of Bitcoin, but of course we also do some analysis and can this really be achieved? And as I was saying in the example of Marathon Digital, last year the efficiency was very low, but this year it's very high. So we would assume that actually this year it can actually track the Bitcoin price. So if Bitcoin rallies for whatever, various reasons, maybe the macro becomes a bit more favorable, maybe it's a strong kind of like year-end rally, maybe a Bitcoin ETF will be approved and so on. We were just kind of highlighting that actually your upside is probably, 5 times bigger than if you're long Bitcoin, and therefore it makes more sense. And I think if I may add one more example here. For example, BitDeer was just recently launched 6 months ago. They have a lot of mining farms or mining exposure in Bhutan. And Bhutan, the mines the Bitcoin really at 1/10 or 1/8 of the cost as in the US. So they have some, I guess, competitive advantages here.
Do you factor? Sorry, Jen. I do have to ask this though. I mean, are you factoring though the higher interest rates when all those when you were doing that analysis, the correlation? Of course, that was at a time. A lot of that data is going to show up. That's at a time when interest rates are at zero or near zero, and the willingness to take on risk in the equity markets were a lot higher. I mean, we had the GameStop and all this stuff. World's changed since then. Interest rates are now 500 basis points higher. What does that account for this change in risk appetite?
Yes, it looks really the last 2 years. So it has not just necessarily, the best of the times, but also the worst of the times. And this is what I was saying. We seem to be, out of the worst of the times because efficiency numbers, have changed. Some of those miners were already, able to refinance themselves. And of course, I admit, and this is what we wrote in the report as well, higher energy cost, higher refinancing cost as an interest rate is a little bit of a wild card. But we are not too, we don't think there is enough feed through really. And this is why we would only, like, for example, we structured a basket really of 10 companies that are trading at a steep discount to the current Bitcoin price. So you're buying actually Bitcoin, for example, 30% lower these stocks. So there is a margin of safety there. So there is a buffer where we feel comfortable in. And that's why we think that it's kind of like priced in right now.
Markus, have you taken into consideration that the halving is coming up in April? Miners are going to earn less per block. I believe it's just going to be just over 3 Bitcoin per block, where right now it's around 6. Have you taken this into consideration?
Yes, we have. For example, Marathon Mining, just as well, Marathon Digital as an example here, they mine currently at 24,000 per Bitcoin, and their costs are going to go up to 29,000. That's what we estimate. And again, it depends on the efficiency and so on, but the efficiency is really high right now. So nevertheless, we need to really rally above 30,000. Otherwise, of course, those miners are in trouble as well. But of course, some have a much lower mining cost. Again, for example, BitDeer has a mining cost of only like 18,000, right around like 15,000. Marathon 24,000. So we factor this in some of the operational cost, and of course it will be a big headwind for a lot of the miners. And we have really split them in 2 universes. One that has a cost already above 30,000, so we would kind of stay away from them. But some have really like competitive advantages in their setup and everything, and the mining equipment that they have. And on those ones, we would really kind of like engage and think that that's a kind of like a good bet going forward.
On the topic of Marathon Digital, they recently mined an invalid block. They said it was due to a bug during an experiment. Can you explain what happened there for us?
Yeah, I'm not aware of this one, so I don't want to like step on their feet there.
Sorry for that. I thought that that was something you were briefed on, so I apologize for that. The last question I will ask you then is about this ETH Futures ETF. We saw the price of Ether pump above 3% this morning when we were doing our markets check. What's your expectation here? Does this tell you anything about the potential for an ETF catalyst when it comes to the spot Bitcoin one? Like, I mean, we haven't seen the markets really react to this ETH Futures ETF news. Does that tell you anything about what might happen when we get a Bitcoin ETF?
Yeah, I mean, when you look at, the back test of the Bitcoin futures ETFs, I mean, they're underperforming because of the roll cost that they have every month. They have some other higher costs. So we are not actually a big fan. We don't think it really matters too much on the future side. It's more important if there is a spot ETF being approved. And I think the money will flow probably primarily to the Bitcoin ETF, and we are really bullish on this one. If it's going to be approved, it looks, of course, right now that it's going to be pushed out until October. But nevertheless, I think once it's approved, there's going to be a lot of money, and the money is going to flow into Bitcoin. And as we said previously, there's probably going to be like $20 to $30 billion being put into this into those Bitcoin ETFs.
Markus, thank you very much for joining the show this morning.
Thank you.
That was Matrixport Head of Research and Strategy, Markus Thielen.